Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and the banking awareness part of it, and so far we had completed the two topics named as banking history and second one is banking evolution. Okay, these are the two main topics we have covered so far. So basically, in this lecture, we are going to start with the third topic, which is also very important from the examination point of view. And this topic is known as Banking Regulation Act 1949. Okay, in short, you can call it BRA 1949. Okay, that is the main topic that we are going to cover in this lecture. Okay, this is the topic, this is the part of it, and now let's move ahead. This is what we are going to discuss in this lecture. Banking Regulation Act 1949. The Banking Regulation Act 1949 is an essential piece of legislation that governs the banking sector in India. Crucial topic for competitive exams, especially those assessing candidates' knowledge of the banking and the financial sector. Okay, so if you are going for the banking exams, financial sector, then it is the must, or you can say very essential topic for you guys to cover. Okay, so let me give you a normal overview before starting this lecture in the depth. Okay, so let's start. First is the ancient times, when we started the banking activities to perform, right? Thereafter comes the medieval times. Then we had a clear-cut evidence of participation of royal courts in banking activities. All right. Thereafter comes the third phase, that was the modern times, when the monetary economy was introduced and leads to promotion and establishment of modern banks. Okay, these were the three main phases which took place in the India's banking history. All right, banking activities evolved during the ancient times. Medieval times, participation of royal courts could be seen. In the modern times, we know the British introduced the monetary policy, monetary economy, and then there was the establishment of the modern banks. But then comes a important phase, which was the independent India phase, 1947 to onwards. Okay, it was a time of 1947. We got the independence, and then we got takeover of banking sector of India from British Empire. Remember it? Now, the biggest challenge in front of us was that how to control and develop Indian banking sector. That was the main question we had in front of us on that time. Okay, because we got the banking sector from the British, and the sector we got was completely designed in accordance to facilitate the Britishers. Okay, so when we got them, we had to, you can say, modified them in accordance of our needs. Okay, that was the first challenge we had. Second, remaining other banks, other banks operating in India were of private ownership. Okay, so how to control them? All right, and the third and the foremost important point is how we will take care of growth in banking sector and financial inclusion. Okay, so these were some of the main tasks we had in front of us during that time period. First thing is that the banks which we got from the Britishers were completely designed in accordance with the British need. The Indian banks we had operating in India during that time was under the private ownership. Third was we would, you can say, we wanted to grow the banking sector in India, but how we will include the financial, you can say, expelled sections of the society in that sectors. Okay, and the overcome of these three things were only one. That was the Banking Regulation Act 1949. All right. So Banking Regulation Act 1949 was passed to control the management and operations of banks operating within Indian territory. That was the first thing. Second, ensure the development of financial expelled sector of an Indian community. These were the two main objectives behind establishing the Banking Regulation Act 1949. Okay, we will have our objectives in this lecture in detail, but right now I'm just trying to give you an overview before I start this lecture in the depth form. All right, so that was the main motive. But all these things required a regulatory body, like which body on behalf of the government will look after all these acts and figures. The correct answer was Reserve Bank of India. If you know, we had discussed the Reserve Bank of India became the nationalized bank in the 1949, similar time when the BRA was introduced. So can you make a connection between them? Yes. So basically, we could say Banking Regulation Act 1949 made Reserve Bank of India a nationalized bank and gave responsibility as of central bank. Okay, so Banking Revolution Act 1949 was the main source behind regarding the conversion of Reserve Bank of India from private body to a nationalized bank. Remember this point also. Okay, so let's move ahead. This is the index we are going to cover. Introduction I had provided you, background enactment, and the objectives we will discuss in this lecture. So let's start. The first is the background and the enactment. The Banking Regulation Act 1949, originally known as the Banking Companies Act 1949, was enacted in India, became effective on March 16, 1949, and was later renamed the Banking Regulation Act 1949 on March 1st, 1966. Did you notice something? Yes. And what was that? Basically, it was first passed out as Banking Companies Act 1949. Okay, on 1st March 1949. Sorry, 16th March, I think. Yes, 16th March. So on 16th March 1949, when the Regulation Act was passed, it was not named as the Banking Regulation Act as we know it today. It was named as the Banking Companies Act 1949. Okay, so when it was converted and known as the BRA, the correct answer is 1st March 1966. On 1st March 1966, this act was known as Banking Regulation Act 1949. So remember these timelines because it is important from the examination point of view. The Banking Companies Act 1949 was the original name when it came into an existence on 16th March 1949. On 1st March 1966, it was renamed as the Banking Regulation Act 1949. All right. Okay. Now let's move forward. Applicability. On which areas this act could be applicable. The act initially applied only to the banking companies. However, it was later extended to the cooperative banks and underwent various amendments to accommodate the changes. The act has been effect in the So if we talk about the applicability, okay, so when it was established, or you can say when it was introduced on the 16th March 1949, because it was named as the Banking Companies Act, so it was only applicable to the banking companies, or you can say ordinary banks. Okay, but when it was a time period of 1966, or you can say 1st March 1966 when it was renamed as a Banking Regulation Act. Then their applicability also enhanced. And finally, now in current terms, if we talk about, then it is covers all institutions involved in banking activities. So the all institutions which are involved in the banking activities now covered under this act. But when it was established and when it was introduced, its main aim was only banking companies or ordinary banks operating in India. So remember this thing. Now, incorporation in Jammu and Kashmir. The act has been in effect in the Jammu and Kashmir since 1956. So remember this point also. Almost in the throughout the India, it was applicable since 1949. Okay, but for Jammu and Kashmir, it was applicable since 1956. Okay, evolution and expansion. Over the years, the Act has expanded to regulate cooperative banks and underwent multiple amendments, with the most recent being the Banking Regulation Act 2020. So, in the year of 2020, there was a recent and latest amendment. Okay, we will have a discussion over this amendment in this lecture, or you can say in the upcoming lectures, basically in this topic, but in the upcoming lectures. Till then, just remember over the years, because as I have told you many times, economy and its needs are dynamic. Okay, these are not static. Okay, that's why, because of these things, we have so many changes in our life, or you can say in our economic and financial life. All right, and these changes also affects the banking and the economic infrastructures, because banks are the major sector in economy. Okay, that's why the banks also affect due to the dynamic changes of the economy. For example, if we talk about this thing, then in the ancient times, by the hundi and the adesh, we could do the banking activities. Then in the medieval times, dastavej was introduced. Okay, and during these times we had the barter system in economy. Okay, but when the British entered during the modern times, then we had got the monetary economy. Okay, now you can see the economy has been changed from barter to the monetary. That's why the banking activities and the other related facts were also changed, and we had seen a modern banks establishment. Okay, similar things were happen in the other things. So over the years, the act was expanded to regulate the cooperative banks and underwent multiple amendments as per the need of the time. Okay, and we could even have an example of one thing: pre-liberalization era. or prior to 1991. Okay. Basically, or you can say, let me write down correct, 1947 to 1991. During this time period, okay, when we had restrictions over entry of the foreign banks, we had a various license to be granted before operationing the banks. Okay, we had a proper regulation and controls over the banks. There was completely overtaken of the government on the banks. So all these things were there. So the provisions and guiding principles of banking activities or banks were different. All right, but after post liberalization on 1991 onwards, when we had a entry of foreign banks, okay, you can say drop out of license, okay, thereafter we had granted a promotion of procurement of technologies, okay, thereafter autonomy for private banks, all right, and multiple other things were happened. So when all these things were introduced in the economy, so do you think that the guidance principles were remained same? No, because this time and for this time the things had been changed. That's why guiding principles were also changed. Okay, so now I hope you have got a clear cut understanding what I'm trying to explain you. All right, okay, now move through. I hope that you have got the understanding. This amendment brought cooperative banks under the regulatory authority of Reserve Bank of India. About cooperative banks, we had a clear cut discussion in the upcoming lectures. Okay, till then, just remember, even in today, the cooperative banks were under the control of Reserve Bank of India by virtue of which act? Banking Regulation Act 1949. Okay, regulation framework. The Banking Regulation Act 1949 provides the regulatory frameworks for overseeing and controlling the banking operations in India. As we had discussed, that this particular law provides a set of rules and regulations, okay, guiding principles, okay, and provisions for suitable actions to be taken on time. So all these kind of things are mentioned in the Banking Regulation Act 1949. Okay. Thereafter, complementary to the Companies Act, the Act complements and works in conjunction with the Companies Act 1986 to govern the banking sector in India. So basically, if we talk about the Companies Act, then India, there are two main Companies Act. The first is Companies Act 1986 and the second is Companies Act 2013. So there are two main acts in India. All right. But the banks which are operating in India, they were also operating for the profit. Okay. And in the general understanding, we obviously say any organization which is working with the group of people and working for earning the profit is a company. Okay. And these companies were basically controlled by the Companies Act of 1986 and the Companies Act of 2013. When it comes to the banks, so we know the private banks and other banks basically working for motive of profit earning, right? So if they are also working for the profit, they also having the employees, they also having the management, they also having the funding from outside. If all these things were similar to the companies, then these are also called the companies. Okay. And that's why, if you remember, when this act was passed as Banking Companies Act 1949. Okay. But thereafter, we felt an urgency that the banks could not be treated as a company in the economy because they have a vital role than the ordinary company. Because if there is a company, they having the responsibility towards their members, okay, towards their shareholders. But as a bank, they have the responsibility towards their depositors, their creditors, their investors, the government, and eventually to the economy. So now you can see the company's responsibility scope and the bank's responsibility scope is totally different. The banks having larger scope than the companies. That's why we had changed it to the Banking Regulation Act 1949. Okay. However, the provisions of the Banking Regulation Act are designed as per the compliance with the Companies Act. But banks are not controlled by Companies Act, but they are controlled by the Banking Regulation Act. So remember this point also. So students, basically in this lecture, we had discussed the background and the enactment, and we have a general introduction and overview of the Banking Regulation Act. Okay. Remember in this lecture, the Banking Regulation Act, which we had discussed, or in this topic you can say, this topic is very, very important from the examination point of view. The correct reason behind this is that we are talking about the banks. Okay. Like what the banks do for the economy, how they are operating, and all these things are generally governed by only one single act, which is known as the Banking Regulation Act. So if all the provisions related with the banks are coming from only one single act, and if we are talking about these banks and we are wanting our career to be in the banks, so now or later we have to deal with the scenarios as per this act. So that's why I'm telling you this act is very, very important from the examination point of view. That's why I required all of you to revise all the facts and figures we have discussed in this lecture before you come for the another lecture. Right now, it's just not only the question of grasping the facts and figures and the knowledge. It is for making of your habit to become serious about your goal. Okay. So with this note, let's end this lecture and thank you.